Good morning, everyone. Paul Duncan with GammaEdge. It is Wednesday morning, 2/19, at about 8:50 a.m. Eastern Time. Let's get right into it. Overall, the summary for today, bias is upward, but cautious. Make sure you review Taylor's market view in the GammaEdge Discord under market status. He's got some good content there. Short term, we do see a stronger bias to the upside. We are seeing some improvement in the ARCX cumulative tick. We have big cam conditions for various stocks improving. Medium to long term is still very cautious. We're seeing poor breadth, and we're also seeing still the downward slope on the cumulative tick. The ES overnight, stable, unchanged. Stronger price bias upward. We're actually trading along the VWAP and the upper VWAP per standard deviation. The VIX is continuing to move down, which is bullish, first low or lowest low since January 14th. And the SPX overall, short-term gamma structure is stronger with upside bias. I know we are still in a negative gamma regime, but it is improving relative to where we were yesterday. 45.50 is an upturn target that we want to hold. 45.07 is a flip zone that did move down a little bit. That is indicative of a few more puts being opened or short-term short calls. We can't tell the difference from this model. And then 44.40, 44.50 is the lower term target. Today's expiry has more positive gamma. This is different than yesterday. So we need downside puts to be closed as well as upside calls to be opened in order to really propel us higher into that 45.50 and above region into the close. Market status by the cumulative tick. This is the ARCX, a little different presentation than yesterday. We do consider this a little more quality of a cumulative tick. I will highlight over here on the right-hand side, the trend lines are now moving up into a positive, and that's because the white cumulative tick is above them. It's going to pull it up, and this is the first part of a reversal to an upside bullish trend. You're seeing the turn as it occurs now. The white cumulative tick crossing yesterday is the key to that, and we need to hold that obviously as we go forward. The key thing here also is that down here we have higher lows in the cumulative tick, which is bullish, and we want to obviously continue to hold that trend as we go forward. On the ES, all the levels are here on the right-hand side. They are unchanged from yesterday, so the structure is intact. There's nothing really happening. We did see a slight decrease in the zeros, but it could be noise, so I'm not reading a lot into it. We've been slightly up, slightly down day over day for the last several days, and we've just kind of been holding in the noise. The overall primary levels are indicated on the screen here. Nothing's really changed. Again, the overnight low since January 14 in the VIX, you can see that we did push an overnight low. When we look at the PM settled SPX and the combo SPX, which is the AM and PM settled, we do see a number of levels emerging and tying together across the boundaries there, which I see as constructive. Right now we closed yesterday at the 45.21 level, which is right in the middle of this JPM copycat and JPM long put area. Think of that as support until it's not, but the 45.21 area, or the 45.20, 45.10, excuse me, should remain, and that's indicated in that as that circle 2. Note that negative GEX or negative gamma exposure in the SPX PM is sitting down at 45.10. That is a change that has moved up, and that is constructive to a short-term support underneath us as we push higher. I will note that the 4600 level ties also over to the 4600 level in the SPX. Positive gamma exposure on the short term for us in the PM settled complex, and is the second largest exposure over in the combo world. I will say that the expected move has gone up a little bit today from yesterday. Yesterday, I think it was 1.7 or 1.8. Now we're at 2.12. We do take the higher of the numbers. It's not suggesting that we will move that amount, but if you're going to look at condors or anything, you definitely want to be aware that there is a pricing mechanism out there that's pricing in that 2.12%. Taken from the equity spot of 45.21, that gives us an upside of 46.17 or 44.25, which you can see how that plays out. From a expiry, today's expiry perspective, we have had a flip from negative gamma condition in the expiry to a positive. You can see that up here in circle 1. Fairly weak flip, so we're back and forth across the noise, but it is there, and I want you to be aware of it. Circle 2 just points to your eye towards that we are looking at a single expiry here. 4,300, or excuse me, circle 3 at the 4550 level and above is a key level for us. If we can get above 4540 and 4550 into the close today, we'll likely push higher. So if we get a lot of calls opening up above 4550, that could be a good attractor for the dealers to have to push us up. The flip side of this is that if we break down below this transition area of square 4, we could push all the way down to 4550 or 4450, excuse me. I don't think that's likely just because of some of the other biases that we're seeing, but just be aware that there isn't really anything pulling us down below the 4450 into the close. But do be aware of this transition area, which we landed, incidentally, into the close last night. And this is pretty common, right? We see this over and over and over where we land in the evenings in these zero transition areas. And so I want you guys to be able to watch this. You can view this in your $E command on the Discord, by the way. The expiration profile has changed a little bit. We have a lot more positive gamma building out above spot price. We've had a significant reduction in negative gamma below spot price. And so some of the fuel has already been exhausted to push us to where we are right now. We've had a number of what I would consider our calls being opened up to the upside since this is above spot. And so just be aware, we are already starting to see the build out. And so we need a continuation of calls being opened above, short-term calls to increase the net gamma and increase the dealer response. And we also need to see some monetization and closing of these OTM puts below us. The SPX condition overall net negative still, circle 1 up here. It has improved at circle 2. I think we're around 117,000 negative net gamma yesterday in contracts, and you can see we've come up quite a bit from that. And then if that trend continues, we will move into a positive gamma regime, which is a very good thing for decreased volatility. I will say 3 and 4, circles 3 and 4 here are still holding at 4,700. That is call open interest and positive gamma exposure. They are unchanged. Transition has moved down just slightly, which I consider bullish, where as the yellow line moves up, once you're in that positive gamma regime short term, that's very, very bullish in general. The flip, as I said, did move down, slightly bearish. Could be the addition of downside protection as we move up. Don't read too much into that right now because the bias certainly is up. Transition did move down just a strike, but that again, when we move down, we're closing some puts and opening up some positive gamma exposure, and I take that as bullish. And then finally, the 4,400 down here, sitting all the way down at circle 5, is unchanged from where it was yesterday. And finally, I want to point out here at circle 6 that we do have about 36% of the gamma expiring between now and next Friday, the 18th. This is up. So we are seeing more and more expiry come into the closer time frames. So with that, I'll close. If you have any questions, feel free to post them in the Discord, and welcome your feedback and comments. Thanks, everyone.